Hey everyone, thank you for joining us again here at the Schaefer Stock Market Podcast. My name is Josh Selway. I'm an editor at Schaefer's Investment Research. We do these podcasts once a week to give people a quick rundown on some recent stock market developments and financial news. Schaefer's Investment Research is a research firm located in Blue Ash, Ohio, for those of you that do not know this. That is right outside of Cincinnati. So whenever we're on CNBC, you'll often hear some of our fellow Cincinnatiites. Apologize, I don't know the proper name there, but they'll give us a shout out whenever we're on there. So if you didn't know about Schaefer's Investment Research, if this is your first time tuning in, thank you. Check us out over at schaefersresearch.com or on Twitter or Facebook or Instagram or over on StockTwits as well. Starting with some broad market stuff this week, the Dow Jones Industrial Average is on pace as I speak for its fifth straight week in the red. The other major indexes are also pacing for a weekly loss. Traders are uncertain about the future of a trade deal between the U.S. and China that continues to linger over the markets. Of course, you had the back and forth with Huawei, the Chinese tech company, that's been the main headline. And then there were other reports about the U.S. potentially hitting other Chinese tech companies with similar restrictions. But nothing has come on that front just yet. As we go into the weekend, you had President Trump on Thursday saying that he's hoping for or sees a quick resolution to the trade talks, but that could just be more lip service to help lift the markets after what's been another rough week. On top of these trade headlines that have been capping stocks upside, you've also had some downbeat economic data on the street this week. First of all, there was manufacturing data earlier in the week, the manufacturing PMI for April, and that was the worst since 2004, I believe. So that was a very weak report out of the manufacturing sector that caught Wall Street off guard. And some are attributing that to difficulties around trade, stemming from the trade relations, that is, and headwinds from that front. And then to close out this week, we had the durable goods report for April, which was also much weaker than expected. Seeing the pull stocks lower from where they were trading earlier in the session. So on top of these question marks around trade, you also have this disappointing economic data as well. And a nice segue from the trade discussion is going right into the retail sector, because retail has been one group that many suspect tariffs could impact the most. Obviously, a lot of these companies like Nike and others import a lot of things from China, and they're worried that their prices will increase. That'll hit the consumer and hit their bottom lines as well. So the retail sector has been one that's been in focus already as these trade tensions have ratcheted up. But then this week, we had a bunch of retailers report earnings, and it was an ugly, ugly week to say the least. You only had a couple names that outperform. I can go down the list here of just a few of the names that reported disappointing numbers, weak numbers, some names that saw their stocks drop to fresh lows. But I wanted to start with one name that wasn't on the earnings front this week, and that is Macy's. Macy's stock has been sliding lower for months, and it just today hit a fresh low. So Macy's is kind of seen as probably the premier department store stock, and its stock has been getting hammered. And that is even without earnings this week. They reported a couple weeks ago. And it's really been the broader market weakness that has helped drag Macy's lower on the charts. We're talking about names this week that reported like Nordstrom, Kohl's, and JCPenney. JCPenney is back below $1. It's hitting fresh lows again this week. That stock just seems like it's only a matter of time before something happens there, potential bankruptcy in the company. We'll have to see what's happening with JCPenney, but they still remain reliant on malls, which of course are closing at alarming rates. There's been a lot of news coverage around U.S. mall closures and what's happening in that space. So that is bad news for JCPenney's. As I said, Kohl's disappointing earnings fell to fresh lows this week. It was more same-store sales for Kohl's that hurt that stock. And as we discussed over at schaefersresearch.com, a lot of options traders were positioned well for that drop in Kohl's stock. A lot of put activity before earnings. So many on Wall Street seemingly were expecting this weakness out of the department store chain. So as I said, Nordstrom was another one that fell to fresh lows. At the time of our writing, we wrote about the stock earlier in the week. It was at 8-year lows, around $33. It was a huge downside gap. And again, put traders were on this one as well. So we've seen a theme where options traders were on the ball here, betting against these retailers ahead of earnings, and their post-earnings move did not disappoint. Nordstrom was another one that also cut its full-year forecast. It's expecting more weakness going forward. Another retailer that hit fresh lows was Urban Outfitters, ticker URBN. Foot Locker as well got crushed. It's trading down like 13% or so today, trading at multi-month lows. It missed on earnings, and revenue was also weaker than expected. Same-store sales rose less than expected during the quarter. So even in the footwear space there in Foot Locker, that stock getting pounded as well. And even we could go to Home Depot and Lowe's. Home Depot reported softer than expected same-store sales for the quarter. That stock is not at fresh lows, but it has been, its upside hasn't been what traders may have expected from the past. It's not outperforming like historically it has in recent years, been that strong Dow component. Again, weaker than expected same-store sales for Home Depot during the quarter. And they attributed that to not only tough weather conditions, but they also cited deflation in lumber prices. And even Home Depot rival Lowe's issued some disappointing numbers. Quarterly earnings were below expectations, and it also cut its full-year outlook as well. So Home Depot and Lowe's, the home improvement retailers, also struggled this week. Now, we don't want to be too negative here. Let's look for a couple names that did well this week, and the big one was Target. Target was the big winner. They continue to see dividends pay off from their investments in e-commerce. They're doing pretty well on that front. They've been holding up decently against Amazon and Walmart's and the likes, as Walmart, of course, has been investing a ton in e-commerce as well. And Target stock continues to rise going into the weekend. It's trading at weekly highs today, adding to those post-earnings gains. And last seen checking around $80 or so, closer to $81. Be interesting to see here if there are any analyst adjustments on Target. We saw a couple price target increases come through after earnings, but right now the shares are getting right up near their average analyst 1-year price target near $85. So that may compel some of these analysts to raise their price targets on Target stock. Another name that grabbed headlines because of its huge move after earnings was Victoria's Secret parent L Brands, ticker LB. It made a double-digit percentage move to the upside after a first quarter earnings beat. The company posted strong sales from its Bath and Body Works business, and it also hiked the lower end of its full-year guidance and had one of its best days in years. This just comes after a long-term downtrend in LB stock. If you pull up a long-term chart of this thing, you'll see that this move was nothing compared to the losses that it's piled up in recent years, or even in the past couple years as well. So while it looked good on paper and the stock made a big one-day move, longer term, this essentially does nothing for the long-term direction of the stock and direction of the company, it would seem as well. Now, this retail weakness is certainly something to consider because we have a lot more retail earnings coming out next week. Of course, we have a holiday shortened week next week with Memorial Day. And if you're interested, we have some seasonal data of what to expect from stocks around Memorial Day over on schaefersresearch.com. Thank our senior quantitative analyst, Rocky White, for that data. But next week, we're going to get numbers from Abercrombie and Fitch, Dick's Sporting Goods, among other retailers as well. Ulta Beauty, that's always an interesting one, and Dollar Tree. So that's just to name a few. There will be some other ones. Costco's on the list. So retail is going to remain in focus, and it'll be interesting to see if some of these names can help turn around the general sentiment around the sector, or if they're going to be the main focus of a lot of investors with these earnings reports coming out that could lead to some bearish trading in the broader market. Now, obviously, trade has been a big issue. I talked at the beginning a little about the U.S. China trade talks. So that's why it was interesting this week to see this bull note come out from brokerage firm Stifel on Alibaba, ticker BABA. That is the Chinese e-commerce giant, a huge player in China and that entire region there. It's growing at an alarming pace, and it's really fallen victim, as you might expect, to the trade war. The stock's been hammered pretty hard. Stifel added it to its select list and said that these trade war headwinds present a buying opportunity for longer-term investors. So I thought it was interesting to see Alibaba get a vote of confidence during these trade tensions, with at least Stifel predicting that now the pain won't be so much that you can't buy into Alibaba right now. Past couple years, Alibaba has been a great stock. It's outperformed the broader market, but as I said, in recent weeks and months, with the trade war and everything that's been happening and the icy relationship between the U.S. and China, the stock has not attracted a lot of buyers. In fact, even with this bull note, Alibaba stock is on pace for its lowest weekly close since January. So that just shows how much the stock has fallen just in recent weeks. And I just wanted to mention a couple names from the healthcare space this week that made some interesting headlines. The first one is T2 Biosystems. That is ticker TTOO. And that stock made headlines and traded all the way down at record lows because of this research firm, Mako Research. That is MAKO Research. They weighed in and said that the diagnostic firm is a disaster in progress and said buyer beware. They discuss false revenue numbers and a toxic credit agreement, unachievable revenue guidance. All three, they're saying, are huge red flags around the company. So that sent that stock spiraling lower. And the other one I wanted to hit on was Iovance Biotherapeutics. Iovance, IOVANCE. Biotherapeutics, ticker IOVA. That stock has been surging for weeks. The most latest rally came after the Food and Drug Administration gave its cervical cancer treatment a breakthrough therapy designation, which sent that stock gapping higher and adding to its huge year-to-date gains. You can read about over at schaefersresearch.com. But I will leave it right there for this episode of the Schaefer Stock Market Podcast. We've been busy over on the site, guys, so if you can, go check it out. Read about what we are writing about over at schaefersresearch.com. Sign up for one of our free newsletters if you haven't already. You can get them delivered at any point in the day, whatever is most useful for you. So I will be back next week with another episode of the Schaefer Stock Market Podcast. Thank you guys so much for listening. Wherever you are listening, if you could, leave us a review or a comment. Say something nice or something we can improve. But until next time, this was Josh Selway. See you later.